Assalamu alaikum friends, welcome to question number 51 of your SBR revision kit. And this question we are going to cover IFRS 8, which is your operating segment, IFRS 9 financial instruments, and we'll see whether we have some other standards or not. So part A is referring to IFRS 8. They are uncertain whether research and development laboratories should be reported as two separate segments under IFRS 8 or not, and they would like advice on this issue for 8 marks. Second, we have Clinton's management would like advice on how to account for the above transactions, okay, for 6 marks. We don't know what is the above transactions until we read the case study. And part B, discuss with reference to IFRS 9 how the above transactions will be dealt. And second one is relating to conceptual framework, how the accounting treatment of this transaction is consistent with conceptual framework. This accounting treatment means the accounting treatment of this transaction means this one. How this is consistent with conceptual framework for 7 marks. Don't forget your conceptual framework, that also will be tested in your section B. Okay. And IFRS 9, usually when you see IFRS 9 looks like it comes with huge amount of marks, but you see this is only for 4 marks. So you could be asked for less marks also, IFRS 9. Now let us read. There are two segments, whether you should aggregate them or separate them. That is the question. One is research, one is laboratory development laboratories. Okay. So they produce and sell a range of drugs through 3 separate divisions. There are 3 separate divisions. In addition to that, there are 2 laboratories which carry out research and development. First of this laboratories, research and development activities funded internally and centrally for each of the 3 sales division. It does not carry out research and development activity. Okay, the first laboratory. It does not carry out research in this one. Each of the 3 divisions given a budget allocation, which it uses to purchase research and development from the laboratory. The laboratory is directly accountable to the division head for its expenditure. If they want anything, they have to ask the division head. They are accountable to it. Second laboratory performs contract investigation activity for other laboratories and pharmaceutical companies. This laboratory earns 75% of its revenue from external customers, and this external revenue represents 18% of the organization's total revenue. Now, the performance of the second laboratory's activities and of the 3 separate divisions is regularly reviewed by CODM, Chief Operating Decision Maker. You must have heard about this in your IFRS 8, right? Their performance is reviewed by the CODM. In addition to the heads of the division, there is a head of the second laboratory. The head of the second laboratory is directly accountable to CODM, and they discuss the operating activities, allocation of resources, and financials of the laboratory. Okay. Whether the research and development laboratories. Okay. That means the 2 laboratories, first and second, because they both carry research and development. But there are differences with the 2 laboratories, the way they fund and whom they are accountable and all those things. So whether they should be recorded as separate or not. Okay. Remember, students often neglect this standard. You should not do it. It will come in your section B. Okay. So immediately when you defined IFRS 8 only, CODM DM comes in your definition only. You define operating segment first. Okay, out of how many marks? It is for 8 marks. Out of the 8 marks, 1 mark is for the definition. That it is a component of an entity which engages in business activity from which it earns revenue and incur cost. Okay, it should be a business activity through which they are earning revenue and it should incur cost. First condition. Second, discrete financial information is available for the segment. Discretely you can find the information. For for this segment, this is the revenue. For this segment, this is the cost. You should be able to find it. And third, who is going to review this result? It is the CODM. Okay, regularly their results has to be reviewed by CODM. If these 3 conditions are there, then it is an operating segment according to IFRS 8. Okay, now we are coming to this one. What is it? If a function is an integral part of the business, It may be disclosed as a segment even though it may not earn revenue. A function may be an integral part of a business. Okay, in that case you can disclose it as a segment even though it does not earn revenue, because not all the activities are there to earn revenue. Maybe some activities are needed there. It's an integral part of the business. For some other activity it's like a helping hand. Even though through that you're not earning revenue, still you can disclose it as a segment. Okay, now according to IFRS 8, so 1 mark for this if a function is an integral part, 2 marks according to IFRS 8. Okay, now we are going to talk about the threshold. Remember when thresholds are given, because they told out of the second laboratory, they have given you the threshold 75% external revenue and that thing. That's why you need to mention about the quantitative threshold from your IFRS 8. Okay, that means operating segment should be reported if it meets one of the following quantitative threshold. Now we'll mention about the quantitative threshold. To maintain the quantitative threshold, okay, how many marks? 1 mark, 1 mark, 1 mark, 3 marks. So let's say out of 8, how many marks? You have already got 5 marks. Actually, in fact, it should be actually 1 mark for quantitative threshold, and for application, because they give more marks for application. So it's not 1 separately, it's just 1 mark for all the 3. So out of 8, 3 marks are gone, 5 marks for applying this to the case study, research and development. Above one was knowledge part. You didn't apply anything to the case study. First one is revenue. We know that revenue should be 10% or more of the combined revenue. That means it's taking internal and external. When you're taking 10% or more, means it is taking both internal and external revenue. Okay. Second, regarding profit and loss. Third is assets. Asset is also like revenue, 10% or more of the combined asset. When it comes to profit and loss, there's a little bit addition thing, because if for those segments, if it's reporting a profit, and for those segments for which it is reporting a loss. Okay, you have to take the absolute amount. Absolute amount means add up all the columns, all the segments which is reporting a profit, add up all the segments which is reporting a loss separately, and see whether your profit figure is higher or the loss figure is higher. Whichever is higher, you have to take the 10% of that, and 10% of more of that figure will be taken as operating segment. That is the meaning of the second point. Okay, so now we are going to the research and development laboratories. Apply the rules to each laboratory in turn. Take one laboratory at a time and apply. That's why more marks are there for application, 5 marks. Okay, but you have to reach a conclusion. Don't forget the conclusion part. You have to reach whether, because the question is such a way, okay, that you have to reach a conclusion. Understanding? What is the requirement? Whether they constitute operating segment or not. The question is whether they should be reported as 2 separate segments or not. You have to tell that yes or no. If a question is like this, whether this should be done in this way or not, then you have to say yes or no. Some questions are open-ended questions where you cannot say yes or no directly. There you just have to recommend some advices. That's okay. They are asking you directly this or that. That's why you have to give a conclusion. For conclusion, 1 mark. Okay. So now first laboratory. Let's say 2 marks is for first laboratory, 2 marks is for second laboratory, 1 mark is for the conclusion. That's how you will get your 8 marks. And 3 for knowledge, 5 for application. Okay. 2, 2, 2, and 1. 1. Oops. 1. Okay. If you see the 2 things together, just from what you have read, don't read the answers. Okay. Do you think first laboratory is an operating segment? And do you think second laboratory is an operating segment? Do you think or both are operating segments or both are not operating segments? First one is not an operating segment. Second one is an operating segment. Why? This is because. Always give reasons. You are getting marks for your reasons. If you just say first laboratory is not an operating segment, you will not get marks, even if it's correct. And if you say operating segment is not, it is not an operating segment because it does not meet the quantitative threshold, you will still not get marks, because there is nothing mentioned about quantitative threshold. How can you say when something is not mentioned there in the case study? That's why you cannot give quantitative threshold for the first part, first laboratory. Nothing has been mentioned. If quantitative threshold is given, okay, then calculate and see. Here, nothing is mentioned. Okay, but there are some facts through which you can know whether there's an operating segment or not. For the first one I'm talking about. Like the first one, laboratory does not have a separate segment manager. Okay, and the existence, it is central. Everyone is using one manager, one head physicist. There is no separate manager for each segment. Okay, if you have a separate manager for each segment, okay, you can say it's an operating segment, but there is only one manager. That's why. Second point, laboratory is responsible to the divisions themselves. Laboratory is responsible to the divisions. They're not responsible to the CODM. Okay, what does it mean? It means simply they are just supporting the existing divisions and not a separate segment. They're just supporting the existing divisions, not a separate segment. Okay, third, there does not seem to be any discrete information, performance information. Is there any information? No, which is reviewed by the CODM. You see, these three things are not there. You can even write 2 points. First 2 points is also okay, or you can write 3 points also. So it's up to you. Now we are coming to the second one. Second is an operating segment. Why? Separate segment manager is there. It engages which is revenue and incur cost. Why? How do you know it incurs revenue? They have clearly told that 75% revenue. Okay, I will take you through that. Here they have given you the threshold. A laboratory earns 75% of its revenue from external customer. That itself shows they're earning revenue. Okay. But here, when you're talking about quantity threshold in this case, you might be thinking why you're not applying this to the case study. Why you're talking here? Because these are some criteria that needs for you to be there to tell that it's an operating segment. First, it has to be an operating segment. Then the point comes whether you have to separate or aggregate or do what. Okay. Maybe for the first one, we cannot say, but those points we can use for the second laboratory. First laboratory, no information is there. Okay. Third, their results are reviewed by CODM, we saw, and discrete information is available also for the laboratory's activity. Finally, conclusion. How do you conclude? Second laboratory should be separately disclosed. You have to tell like this, because the question is whether you have to separately disclose or not. So yes, you have to separately disclose because its revenues make up of 10% or more of the revenue of the operating segment. You see, you are using this quantitative threshold there, what you have written above here now. That's why you need it. Here you don't have to talk about profit and assets. It's only about revenue that is given. So talk about revenue only. It is more than 10% of the revenue of all operating segment. Why? Because they told both internal and external. If you take, it's more than 10%. So that's it. Second is regarding some transactions. We'll see. They agreed to sell a patent right. Patent right means it's an intangible asset. Okay. To another pharmaceutical group, Janssen. Janssen would like to use patent to develop more complex drug. Will receive publicly listed shares of the Janssen in exchange for the right. They are going to receive some shares in exchange for this right, for the patent right. The value of the listed shares represents the fair value of the patent. If Janssen is successful in developing a drug and bring it to the market, they will also receive a 5% royalty on all sales. Additionally, they want a competitive bidding arrangement to acquire a patent. The purchase price was settled by Klancet issuing new publicly listed shares of its own. Okay, how are you going to account for this about transactions? Most of you will not be able to answer this, or some of you might have omitted this altogether. You didn't even try. No specific standard. Only looks like it's an intangible asset, looks like it's IS 38. On the other hand, you are seeing shares. You might be thinking something to do with financial instruments. Confused. They just told advice on the above accounting transactions. If the question was like this, like how the first one was asked, whether the two should be separately disclosed or not as an operating segment. This is a very straightforward question. You either say yes or no based on some knowledge that you have from IFRS. Second one, how do you answer? Second one is very difficult. It's not open-ended. You have to advise on the above accounting issues. That's it. Transactions. 6 marks. Marks are also less compared to this one. For this type of questions, you need a little bit, you need to think more than the first. First one is very easy, straightforward. You know IFRS 8 you need to apply, you know these are the quantitative threshold, you know these are there, you know this is first and second laboratory, I'm going to use this and I'm going to conclude. You know there's a structure also. What about second? Okay, so that's why they told take your time and think through which accounting standards are relevant to these transactions. You need to think. As I told you, shares, it will go to IFRS 9. At least one you have identified. Sale of patent. This is a patent. You are selling a patent. Patent is an intangible asset. Okay, but you need to apply the rule of IFRS 9 because they are selling shares, selling patent. Selling patent is an intangible asset. Okay, so you are receiving shares for that, and that shares comes in IFRS 9. Whenever shares are there, IFRS 9 only. So shares received are in the scope of IFRS 9, and they are to be initially measured at fair value. Okay, so Klancet, because they are selling patent, they should de-recognize the patent. That's an asset which is transferred to Gen Z. Okay, because you are de-recognizing something, selling means you are going to have some profit or loss. So gain or loss on disposal is recorded where? Profit or loss. Profit or loss. So for that, 1 mark. To say that shares are in the IFRS 9 and patent, you are going to de-recognize patent. When you are selling patent, this is the impact. De-recognize patent, the shares received will be initially measured at fair value under IFRS 9, and gain and losses will go to statement of profit and loss. Another mark. See how there are two things. One is purchase of patent, one is sale of patent. Sale of patent is easier. Okay, so if you see here, purchase of patent is less. Okay, sale of shares, definitely you'll be getting more marks under that. Now we are coming to the remeasurement. Another mark for this. Share should be remeasured to fair value at the year end. Okay, and any fair value changes are recognized in profit and loss except for those equity investments for which entity has elected to report value changes in other comprehensive income. Okay, if it is equity instruments through other comprehensive income, then you have to recognize the fair value changes in other comprehensive income, not profit and loss. Otherwise, it is profit and loss. Okay, just see how I have added this part with it. You have to add like this. Okay, normally profit and loss, but if they have elected for other comprehensive income, then yes. Now another mark for this, third. In fact, for this, you are going to receive 2 marks for this because you are talking about two things. One, shares under IFRS 9, the other one, de-recognized patent. So 2 marks. And so 2, 3, 4, and 5 and 6. That's how you're getting the 6 marks. But we will finish the last paragraph of cell. What's next? What about the royalty that they are going to receive? When you are selling patent, they should not recognize any asset that is relating to future royalty stream from the sale of the drug. Why? Always give because. You don't have to recognize because. You have to recognize this because. You have to measure it this way at cost because. You have to measure it fair value because. Everything, every answer is this pattern only you have to follow. You state something, recognize, de-recognize, measure, remeasure, whatever value it is, because. Because when you tell about because, it is you have to know your because. You have to know your reasons strongly. If you know it, you will get the full marks. Okay, when you are linking it, you should know the knowledge and you should link it to the, you have to apply in the because part. Apply to the case study. Because the stream of royalty is contingent upon the successful development of the drug. Why you should not recognize? See, the royalty that you are going to receive or not, you are still not sure. It is dependent. It has some conditions attached to it. What is the condition? If you successfully develop the drug, then only. What if you don't develop the drug? Most of the time, drugs are not developed. In between, they might leave. Then you're not going to receive this royalty. That's why you don't have to, you should not recognize asset. Why? Think about conceptual framework. What does conceptual framework talks about recognition of an asset? You should recognize when it's probable that you are going to receive the benefit. In this case, it's not probable. It's contingent upon some condition. And also according to prudence concept says do not overstate asset. So if you do that, if you recognize asset, you're overstating asset. In case, assume, let's say you are not, the development of the drug is not successful, then what happens? What about the royalty that you have received as an asset? You have recognized it as an asset. That's why you should not recognize it as an asset. There's so many things. Conceptual framework, prudence concept, and blah blah. But it's not needed. I'm just explaining you the reason why it would be best not to recognize an asset for your better understanding. Purchase of a patent. Now it's quite shocking. This is the quite shocking area for students IFRS 2. In this IFRS 2. How IFRS 2? Because patent is an intangible asset, no? Correct, no? But look at the transactions. The question asked you. See how the question asked you. They didn't tell how you are going to account for a particular thing. They didn't tell you how you are going to account for a patent, how you are going to account for share. The question requirement is above transactions. Transactions, when you're transacting. So even if it's an intangible asset, the way you are doing the transaction matters a lot. That will change your standard. That's why reading case study is very important. That also with a clear understanding. You have to correctly interpret things. Okay. Why it is under IFRS 2? Because Clanton has received a patent in exchange for issuing its own share. See, they are not paying in cash. IFRS 2 says share-based payment. You are receiving something for which you are paying shares. You are buying a good for which you are paying shares. You are buying a service for which you are paying shares. Share-based payment. Understood? It is not always for employees. Students often think that this share-based payment is only for employees. You are giving shares, incentives, share options, share appreciation, right? No, it can come for this also. When you want to buy something and you are issuing your own shares to buy that. Patent is a big amount. Why shares? You might ask, why not cash? Amount of patent is huge. It's in millions. If you want to patent something, that's the reason that they are issuing their own shares to receive this patent. So that's why this scope is under IFRS 2. Last point, purchase of patent. Now you know it is under IFRS 2. Apply it. Knowing it under IFRS 2 is not enough. It will only give you 1 mark. You need to know how it will have an impact. Apply this. So the transaction is with a supplier rather than an employee. This is what I was trying to tell you. It can happen like that. So they should remeasure, everything comes here. Applying means, application means how you are measuring, how you are remeasuring, how you are recognizing, how you are de-recognizing. Understood? That is the meaning of accounting application. That is the in simple terms. How do you recognize? That's it. So they should measure the patent purchase at its fair value and make a corresponding entry to equity share capital. Correct, no? When they are purchasing the patent, debit patent, credit equity shares. So if Klancet cannot estimate reliably the fair value of the patent, if they cannot estimate reliably the fair value of the patent, then what happens? Because it's a patent, no? Patent is an intangible asset. Don't forget the rule of intangible asset. So even though you're not mentioning IS 38, intangible asset, it's not easy to find fair value. Active market is not there most of the time. I'm not saying it's not possible, but it's hard. So that's why they have mentioned this point. If you cannot estimate reliably the fair value of the patent, then what should you do? Then it should measure the transaction at the fair value of the equity instruments granted. There's a way for that also. Then you cannot take it at fair value. Then measure the transaction at the fair value of the equity instruments granted. The day that you have granted this equity instruments, the shares, that is your equity instruments is your shares. The day you have granted that, look at the fair value at that date. If you cannot find the fair value of the patent, look at the fair value of the shares the day that you have granted. Take that, measure the patent at that amount. Now we are coming to the financial instrument. For 4 marks, this should be easier, you see, because our most focus will be on conceptual framework than on writing this part. So this should be something easier, because the previous question to this, if you haven't seen question, what is this question? This is 51. The previous question 50, they have covered financial instruments like thoroughly. I've covered there. So make sure that you watch that video also as well. They have, because that whole I think there are three requirements. All the three requirements are on financial instruments. So that's a very good question because the marks are also huge, like 10 marks, 9 marks, 8 marks, like that. But compared to that, this is a 4 marks question. So make sure that you see this and this one together and see the differences. Okay. As I can see, this is a debt in instruments, 5 million. Transactions fair value. Business model is to, they will give you the business model always for debt instruments, especially is to hold the financial assets to collect the contractual cash flow, but also sell the financial investments. That means they're buying, they're not keeping it till the maturity date, they're selling it. Why they are giving you this business model? For you to know at what, this one, at what to measure. This is a financial asset. Please identify that this is a financial asset. You should know it. It's a financial asset. Debt instruments could be a financial asset. Financial asset could be two types: debt instruments, equity instruments. Equity instruments means when it's shares. Debt instruments when it's bond like this. So this is a debt instrument. How to measure that debt instrument? That's why they are giving you the business model. Otherwise, there's no purpose of this business model. Okay, when you're buying and selling, it's a different method. When you're just keeping it in the majority, measuring it at a different thing. I will not tell you the answer right now. So interest, they will definitely give you interest because it's a debt. So interest received 4% annually in arrears. This interest is used to find the interest rate, and this effective rate of interest 10% is used to discount. Remember, okay. On 30th June 2007, after a year, the reporting date, fair value of the debt instrument will change. It went to 4.5. Earlier it was 5. This does not, okay, but it went down. Does it mean that your credit risk increased significantly? No. No significant increase in credit risk since inception from the date. That means expected credit losses are immaterial. That's why they have not even given you also, right? The debtors are unsure about how to account for the financial instrument. They also wish to know if the correct accounting treatment is consistent with the conceptual framework also or not. So this is something it should be easier for you. 4 marks. Okay. So this is a financial asset. Please identify that according to IFRS 9. This is a financial asset and it should be initially measured and recognized at fair value of 5 million. 1 mark. Their business model means you are going to use fair value through other comprehensive income. I've told you this is the reason why. Because when you are buying and selling that debt instrument, you are going to measure it at fair value through other comprehensive income. Why? Because it is fixed. The rule says it. When you are going to keep it till the end, till the maturity date, redemption date of the bond, of the debt instruments, you are going to use amortized cost. Understood? Because you are buying and selling fair value through other comprehensive income. And the interest income, see one after the other, it's linked. First, it's a financial asset. Then, measured fair value. Third, fair value where other comprehensive income. Fourth, interest income. Because you are giving a debt instrument to someone through which you are earning an interest. Someone is paying you interest. Interest income should be calculated using effective rate of interest. And gain and losses will go to OCI. Okay? Because fair value through OCI. Okay? So, for that, it is 2 marks. 1 mark and 1 mark. Okay? 1 mark for calculation, 2 marks for this, and 1 mark for the last one. Okay? How? What is the fair value? 5. Interest 10%. Receipt 2, 0.2. How? 5 million into 4%. See, when you're taking an interest on this 5, take 10% effective interest rate. But when you're receiving an amount, receipt, you have to take 4% on 5 million. On 5 million, not 5 plus 0.5. And you are deducting it. This will remain fixed. 0.2, 0.2, 0.2. Okay, I will show you here. It's like the coupon interest that is given to you. This 4%. You see, interest is received at a rate of 4% annually in arrears. Every year it's 4%. Interest is received. That means this is the interest that you are going to receive every year. It will be the same. Okay. Effective rate of interest is 10%. There's a difference between these two interests, by the way. Okay. This is the effective interest. This will change. This interest will change every year based on the brought forward balances. But this 0.2 will remain fixed, 0.2, 0.2, 0.2. Okay, because this effective interest rate, you have to add this interest you are deducting. Why? Because from the amount of your debt, if you are receiving interest means now you are receiving less amount you have to receive. It will, until it becomes zero, you'll be receiving this. Okay. But through this, you are earning an interest income also, 10% on this, and this is you are receiving. That's why you deduct. Because if, okay, subtotal. After you do this 5.3, then you deduct the loss and find the fair. This is the closing fair value. Fair value is already given to you 4.5, so you can easily find the loss. It's just the balance between this and this. So at this interest income, where will it be recorded? Profit and loss. Remember, interest income, profit and loss, 0.5. That you have just calculated using based on effective interest rate. The revaluation. Okay, when you have revalued, the loss will go to other OCI. You can just write OCI also. You will still get the marks. And this revaluation loss, will it be reclassified or not in the future? It will be. It may be reclassified to profit and loss in the future when you are entirely selling that. The date when you are selling it, you reclassify. So this one. Now we are coming to the conceptual framework. Okay. If you see, the conceptual framework is quite a lengthy answer. Whether it is consistent or not. To answer this question, start with the definition of the asset. What is important? There are 5 elements. See, when you are answering a question on conceptual framework, okay, this also you should know that conceptual framework talks about 5 things. Asset, liability, equity, expense, income. Most of the time it's based on asset and liability. Most of the time it is on asset and a liability. And the most common area is asset, because more things you can write also on that asset. That's what I'm telling you. But it does not mean they will not ask other areas. They might ask on asset or a liability, equity, expense, income, any particular thing they might ask you. That's why in this case, what is it? It's an asset. What type of asset does not matter, but it's an asset. It could be any asset: intangible asset, tangible asset, financial asset, deferred tax asset, uh, any asset, pension asset, any asset. Conceptual framework generally talks about all kind of assets. So you start with that definition of an asset according to conceptual framework, 1 mark. Definition of an asset. This is according to conceptual framework, okay? That remains same. So you can even memorize also. It's a resource of an entity that is potential to produce economic benefit, okay? So in this case, what is it? This is a financial instrument. Link this. One line of definition for an asset is enough. You don't have to write 4-5 lines. So conceptual instrument meets the definition of an asset. Second point you will get for that. Whether financial instrument meets the definition of an asset or not. Second point for that. So in this case, it meets the definition of an asset. Because why? It has a contractual right to receive cash. You have to talk about this. How? You have given debt instruments. It's like you are giving a loan to someone through which you have a right to receive interest and the principal amount of them, right? Contractual right to receive cash. That's why it meets the definition of an asset, because Klancet mentioned the name of the company. Now, coming to the second. First paragraph only you can talk about asset and whether this meets the definition of an asset or not. That's enough. It's mostly about definition. It meets the definition of an asset or not. Second, third point. This is a 10 marks question. Okay. So sorry, it's a 7 marks question, I guess, right? Yeah. 10 or 7, it's okay. It's not so different. So 7 marks. So out of 7, already 2 are gone. Next. See, some of it looks, the length is very big, some of it, the length is very small, still 1 mark only. Because it does not matter how many lines you are writing. You can write this answer in 2 lines also, still you can get the full marks. It's up to you the way you write. Because this is a model answer. Maybe the way they write it's more extensive and more detailed, but maybe the way you write is much brief, but you are writing to the point, you will get the marks. Because I also used to write like that. I used to write to the point. But definitely to the point does not mean that everywhere I'm going to write too short also. Wherever explanation is needed, a bit detail is needed, I need to explain, right? I used to do that. So yeah. But wherever time is not letting me, I just used to write the main points. There I cannot explain so much when I'm running out of time. Usually it does not happen, but when it happens, mostly towards this type of question, because this type of questions usually comes in your question number 4 towards the end. So yeah. If you're running short of time, just write definition of an asset. Financial instrument is an asset because it means this one. Then directly just write it shortcut. No need to write so many paragraphs and all. So now, what does conceptual framework says? Now we are going to talk about two things. Two things here. What is it? What is it? Qualitative characteristics of useful information. Okay. Okay, I will just I'm trying to write with a pen, but that's not. I think something is wrong because it's hard to write, and if I type also, it's very the font is very this thing. Okay, anyway, I'll write qualitative characteristics of information. What is it? R. I say it FR, or you can say RF also. F stands for faithful representation. R stands for relevant. Relevant. You talk about these two things. Okay. So that's what they have mentioned here. Whether the information that they have presented, it needs to meet two conditions. Two fundamental characteristics, qualitative characteristics, fundamental qualitative characteristics. We still didn't reach to understandability, timeliness, verifiability, and all those. Those are enhancing. We'll come to that later if it's needed. But first, these two things needs to be there in any conceptual framework answer. You must have seen these two words. It's always repeated: relevant and faithful representation. So let's read that paragraph. According to conceptual framework, an element is recognized. You recognize an element if the recognition provides relevant information as well as faithful representation of that transaction. Okay, so this would seem to be the case because in this case it is relevant if you provide information about this, disclose this financial instrument as an asset. Will it be relevant? Yes. Will it be faithful representation? Yes. Why? Because your primary user, they are interested in the future cash flow. Okay, they are interested in what? The users of financial statements, they are interested in future cash flow. It's relating to debt instruments. They want to know what is the future cash flow. Everyone wants to know how much you're going to receive. They want to know how much you're going to receive, and they also want to know how much they have to pay you. For that they need information. So future cash flow that entity will generate, and this financial instrument gives a contractual right to future cash flow. Because of this financial instrument, it is giving an entity the right to receive cash. That's why you need to. So moreover, the cost also can be measured reliably. You also have to see whether cost can be measured reliably or not. So relevant, faithful representation, and reliability, I would say. FRR. FRR model. As such, recognition of an asset would be in accordance with the conceptual framework. 1 point. In this case, yes, recognition of an asset is going in line with the conceptual framework. Okay. We'll see more. Fourth. Okay. What is fourth? Fourth, we are going to talk about profit and loss. Talk about the sources of information. One is profit and loss, for the statement of cash flow, statement of financial statement. Those are the things, right? Profit and loss. One mark, another mark for this. This is for P&L. They state that statement of profit and loss is a primary source of information. Whenever you want to know about the profitability of the company, everyone will look in profit and loss. Okay, this gives an investor to understand their return, to get their future cash flow, and also they can see the stewardship also of the entity's resource. Okay, so you can mention about those things. Assess future cash flow. Wait, assess future cash flow. Assess stewardship. Okay, for the investor. Now, what is the fifth? Fifth mark is for this portion. This is sixth. And for this you are getting 7 mark. The 7th mark you are getting here. Okay, you see, that's how you're getting the marks. It's a bit difficult for me because it really have to. So this is regarding what? Fifth point is what? When developing or revising a standard, we have to talk about income and expenses also, because with asset comes income and expenses. So don't forget that. In this case also we have income expenses. Okay, when developing or revising, they need to require income expenses also. To be presented where? We are talking about, we are presenting this where? Financial instruments, other comprehensive income, or profit and loss? Other comprehensive income. That's why we have to mention this also, profit and loss, and about other comprehensive income, whether it will be advisable to do so. So if you are presenting income or expenses that are in other comprehensive income, you can do that. You are required to do that if it results from remeasuring an item to current value. And if this means that, okay, when you are remeasuring an item to current value means when you are measuring fair value, or when you are remeasuring it at the reporting date to the fair value, normally we put it in other comprehensive income. That is one thing. And also if it means these two things, these two bullet points, if it satisfies these two bullet points, okay, you can. What is it? First one, profit and loss provides more relevant information. That means you think that putting that in profit and loss will not be relevant. So better to put it in comprehensive income. Second, faithful representation. So here also the thing is relevant and faithful representation, even in profit and loss. Okay, so in that way you can put it in other comprehensive income. For that, fifth mark. Here you are not applying anything to the case study, you are just giving the knowledge part. Okay, maybe that point later you can apply. We are going to the sixth. We have to talk about what? Now you have to apply to the case study. Towards the end you will always see application more than knowledge, because knowledge part you have already explained above the points. So it is about business model. You need to talk about business model. Why? Because other comprehensive income is based on business model only. So in this case we'll see whether it is faithful representation and whether it is relevant or not. Their business model involves holding the asset to maturity in order to collect the contractual cash flow. Under better investment becomes available. Okay, it does not intend to trade the asset in the short term. What is it? They do not intend to trade the asset in the short term, and so the fair value gain and loss in the instrument are largely irrelevant when assessing their performance. That's why, because it is, you're holding it, you're not holding it until maturity. Okay, if you're getting a better investment somewhere else, you can sell it. You're understanding this? So if you can sell it somewhere, that means the fair value gain and losses is also for a short term. You understanding? So the fair value gain and losses on the instrument are largely irrelevant when you're assessing their performance. To assess the performance, you don't need the fair value gain and losses. It's largely irrelevant. Just largely irrelevant. The fair value gain and losses for the performance, to assess the performance of the company. So presenting the fair value loss, what is the loss? You can even mention the amount of loss also. So presenting the fair value loss of 0.8 million in other comprehensive income is good in this condition. It is also consistent in this case with conceptual framework. At the end, you see all the thing is consistent. This one is also like this, is consistent with conceptual framework, is consistent with conceptual framework. You might even get some points which is not consistent. If you can come up, you can write, it's okay, you will get marks. So at the end, you have to write is consistent with conceptual framework or is not consistent with conceptual framework. Understood? So in this case, looks like everything is consistent with conceptual framework. Okay. So yes. Why it is consistent? Because it's irrelevant to assess performance, and performance you look at through profit and loss, not other comprehensive income. So the statement of profit and loss in this case presents the entity's economic returns during the period. In this case, profit and loss will give you faithful representation as well as it is relevant also, because this is relevant to portraying profit and loss. Last one. Conceptual framework states that income and expenditure. Now we are talking about reclassification, whether it is good to reclassify it into other comprehensive income at the end. Okay. So they also talked about income and expenses that is included in OCI that should be reclassified to P&L. Conceptual framework says that also. What did it say? When doing so results in profit and loss, provide more relevant information. That means when you reclassify to profit and loss, now it will give more relevant information. In that case, it's good, otherwise don't recycle. So in accordance with IFRS 9, we told the same thing. It will be reclassified to profit and loss, right? The gain on loss on the debt instruments. When the asset is derecognized, when you're selling the asset, and entirely you are going to gain and losses from OCI will go to profit and loss. So in this regard, the treatment of debt instrument is once again consistent with the conceptual framework. Okay. Understood? Because that debt instrument will be not there, no longer will be there. So when you're derecognizing it, why do you keep it in OCI? Better to put it in profit and loss once forever. So that is also consistent with the conceptual framework. So how many are there? 1, 2, let me go up. 3. So most of the things, asset, when you're recognizing, let's summarize this last point. When you're recognizing asset, consistent with conceptual framework. When you're putting it in the profit and OCI, consistent. When you are classifying it from OCI to profit and loss, again consistent. So you see, that's how you're getting the 7 marks. And let's go back the previous ones. Previous one was again regarding patent and shares. This was share part. When you're selling it, it is under IFRS 9 because you're selling an asset. When you are purchasing the patent, it is under IFRS 2 because you are paying shares to receive the patent. Then the first one was regarding operating segment. You gave some quantitative threshold, you gave some things like revenue should be earned, should be reviewed by CODM, right? So that's it. See you in the next question. We have almost was the end. I think there are 5 more questions that are pending before we officially finish the revision kit, all the questions in SBR. So, and when your exams are near, it's just 1 month. We are 1 month away from the exam, so I'm assuming that by now you have at least finished the revision kit once, and this is your second revision. So best of luck for that and take care. See you in the next video.